we are going through a very uncertain time. Now we are in the middle of kind of a war-like situation. How do you see the market?
2008 was a tough time. The global financial crisis was hitting. And asset management industry was going through a large pain. Recently, if you look at, a lot of people put money on gold and gold started running. Gold also forms a part of the asset allocation.
And over this period of time, especially post-COVID, we have seen that the new age, the youngsters have entered the market. How your mutual fund is trying to adapt this change?
60% of assets are in equity fund and 40% are fixed income. We work on three pillars: people, process, and products. We are now almost 330,000 crores of assets. We have almost 1.3 crore customers. That means every fourth investor, one will be an Axis. Mutual fund is subject to investment risk. In my view, mutual fund is subject to emotional risk. As long as there is a consistency in return, I think from a longer term perspective, I think these funds do much better than the top performing fund always.
Somebody wants to start mutual fund investing now. What should be the approach?
Well,
Hi everyone, welcome to Dhan Podcast. Today we have a very special guest with us, Mr. B Gop Kumar, who is MD and CEO of Axis Mutual Fund. Thank you so much, sir, for taking a time out and doing a podcast with us. It's a real pleasure to have you on our show, and would love to interact with you, understand more insights about mutual fund industry, about investing, and a lot of other stuff. So my first question to you, sir, is...
First of all, thank you, JP, coming to office.
Thank you so
really
much.
Appreciate
Yeah, and
covering
we have got a wonderful office. So we were just sitting across and seeing the amazing view. Everything was superb. Yeah. Thanks for that.
Thank you so much.
So Gop, my first question would be about mutual fund and the strategy of Axis Mutual Fund. So how Axis Mutual Fund is different? Could you just help us understand that?
See, our core philosophy is that how do you deliver consistent performance across our products? I think that's very critical for us. I think we have a huge responsibility to deliver returns to the investors. As a fund does, how very different. One is from the investment style. We continue to be a growth and quality focused portfolio managers. And if you look at all our products, we have a large amount of products across the schemes across investors. And our endeavor is to deliver consistent performance. We work on three pillars. That is people, process, and products. And that's a focus where we build on. And as of now, if you look at, we are now almost 330,000 crores of assets as of today morning. We've been growing very fast. Historically, if you look at, we are the youngest AMC in this country. We'll be a top 10 AMC. Which is the 16th year of existence. So across products, for example, we are the 6th largest equity fund, 6th largest fixed income. The journey has been very good, thanks to our investors and distributors like you supporting us.
No, thanks for that. Just, my next question, Gop, is, Axis Mutual Fund came into existence in 2009.
Yes.
2009, I feel, was a bad year because the world was going through global financial crisis. And if you see the AUM distribution, it was more of a fixed income kind of industry in India. The equity mutual fund was a very small percentage. And what it is today is probably 70% is equity and 30% is fixed income. And over this period of time, especially post-COVID, we have seen that the new age, the youngsters have entered the market. Now, if you see the demat accounts which got opened, around 40% of them are, out of 20 crore demat accounts, 40% comprise of people who are less than 30 years of age. So how, seeing this shift from, the interest towards fixed income coming to equities, and how your mutual fund or Axis Mutual Fund is trying to adapt this change, and what are the plans going forward?
So if you go back to history about Axis AMC, we started in 2009. And everybody thought that what this new AMC will do, because 2008 was a tough time. The global financial crisis was hitting. And asset management industry was going through a large pain. The regulation started changing a lot. What I understand, and while I was tracking Axis AMC at that point of time, was that we are the 2009, we came with the first equity fund, not a fixed income fund.
Okay.
And everybody said that these markets, how can you raise money? I think that's the journey started.
Yeah.
So historically, if you look at from our perspective, our 60% of assets are in equity fund and 40% are fixed income.
Okay.
But if you look at from an Axis Group perspective, and we are the large corporate bank, and like our fixed income should be much higher. But having said that, last 1.5 2 years, our fixed income portfolios have done extremely well. We deliver very consistent return. When you look at from industry perspective, the today industry is 65 trillion.
Yeah.
And if you look at from Axis AMC perspective, we have almost 1.3 crore customers. That means every fourth investor, one will be an Axis AMC.
Yeah.
So it's our retail base is pretty large.
Correct.
So that's the size and scale what we built. And we do believe that we have a huge opportunity to grow, just not on the equity side. We also have fixed income products. We got products now. The SIF is coming, new categories coming in.
Okay.
We're very clear that there's one huge area we need to invest money on. We already announced our CIO. Very importantly is that we're just not a mutual fund company. We also have alternates which able to give products for large HNIs. So when you look at from a product basket perspective, from our strategy perspective, we have product from a retail to our large investors. We run a private equity fund, we run a real estate fund, we manage portfolio management schemes across.
So that's all under mutual fund?
It all comes under mutual funds.
Wow. Okay.
So as a advisors or a distributor, I think when you look at from Axis perspective, I've always said that with one AMC, you're able to give product for all set of investors in this country.
Oh, that's amazing. So we have spoken about Axis Mutual Fund and its philosophy. Now I'd like to also get some insight from you about the current market conditions, macro and economic views. We are going through a very uncertain times.
Yeah.
Mr. Trump is doing his own tantrums. Now we are in the middle of kind of a war-like situation.
Yeah.
How do you see the market from here? In terms of the current market environment, how it's going to impact the mutual fund industry?
I think the way I want you to think about, and the viewers should think about, is that there are 3-4 moving parts here. One is what's happening globally.
Okay.
I think tariffs is the biggest thing what's happening, where even US economy doesn't know that what's going to happen next.
Yeah.
And this tariff, how does this tariff play out in terms of corporate results? What amount of the tariffs can be passed on to the end consumer?
Yeah.
I think there's still a debate. I just came back from New York like 2 days back.
Okay.
So there is one bigger debate. I think the clarity will emerge from India perspective is when the BTA is signed. But if you look at from economist perspective, people say the impact can be much minimal compared to our larger economies like China.
Yeah.
We have to wait and watch how does it shape out. We are going through a political tension between two countries. I don't know how much it will play out, what's going to be impact. But if you really look at from a war-like situations, why is that impacting the markets? Because suddenly you will see that money allocated for welfare schemes moves towards the defense. So that's where the markets may not like it, and market doesn't like the instability.
Correct.
Third point, what I want to think about is that how does the corporate results look like? Corporate earnings has been weak for last 4 quarters. I think that's the reality.
Yeah.
And market is slave for the corporate earnings. So to make your viewers simpler, why is corporate earnings is important in the sense that if you have corporate earnings gives 6-7%, and typically will have 3-4% premium. That means equity can give a return of 10-12%.
Yeah.
You have seen maybe the euphoria last year up to October, 18-20%.
Yeah.
And when the market corrected, it will come back to the same number, which is corporate earnings plus 3-4%.
Yeah.
I think it's very important to track how does the corporate earnings looks like. But having said that, our view is that Q2 onwards corporate earnings should look much better than where we are. I think that is a struggle. So at the end of the day, very important to look at corporate earnings and how does it play out.
Right. Great.
So it's just not looking. So there are ifs and buts. Now I think the clarity should emerge by Q2.
Correct. So amidst all this uncertainty, is there any plan to change the fund strategy, or how do you want to balance the risk and the reward in terms of returns coming.
So historically, if you look at 2 years back when our fund was going through a large pain because we were a growth style guys, growth style went out of flavor and value took over. Another thing what we did was we diversified our portfolio.
Okay.
So if you look at our top 10 holdings, today don't constitute more than 40% of the weightage on the portfolio.
Okay.
So well-diversified fund. We also believe that risk-adjusted return is very important.
Yeah.
I just want to give an example that our small cap, we are the fourth largest. We manage almost 24,000 crores. If you look at our beta, we are beta at 0.7. Okay. That gives a understanding that what type of risk-adjusted return we are looking at. I understand when the peak of the markets, everybody was chasing returns.
Yeah.
People were not bothered about what is the risk the fund manager has taken in the portfolio. It is true because when markets are good, investors just chase returns. Having said that, when we look at post-market corrections, you will see our portfolio. Our portfolios are now substantially looks much better than compared to a peer group.
Okay.
And if you look at our performance across, today most of our fund, 98.9% of the fund beat one year benchmark. Okay. And most of the funds are in first quartile. So I think the answer is that it's very important to chase return. I'm not saying that, but it's also important from an investor perspective to look at what is the risk the fund manager is taking. I think that should be looked at from a statistical measurement what fund house gives. I think you look at and take a call on that. And or you can ask your advisors that are we taking a right call on the mutual fund in terms of risk the fund manager has taken, and advisor will be able to give you a right advice.
Absolutely.
And all the return, all the top performing fund may not be top performing forever.
Forever, that's true.
I think you see that data across.
Yes.
You'll see that. But I think what beats the returns for investors from a longer term perspective is that what type of risk the fund manager has taken and how consistent is the return. Yeah. As long as there's a consistency in return, I think from a longer term perspective, I think these funds do much better than the top performing fund always.
Absolutely. Yeah, just on that line, I'd like to understand how should somebody who has entered the market, probably in a new guy to the market, how he should have his fund allocation strategy. If I have to define it more properly, is like in terms of demographics, as I mentioned earlier as well, that more than 40% of the total demat accounts are of less than 30 years of age. So somebody who is less than 30 years of age, what kind of fund scheme they should select? One. Second, if somebody is between 30 and 40, what should be his approach? And 40 plus ka approach kya hoga?
I think, I agree. I think there is no, I don't have a solution based on age group, but I can broadly can speak about is you need to understand your goals. I think goal is very important. I think goal planning is very critical. And that's where you need to think about how does you look at from a asset allocation perspective very clearly.
Yeah.
If you look at last 3.5 years, you had a new set of investors coming into the market. I agree with you. Yeah. There is the age group drop. You found new set of investors coming in. If you look at why did it happen, if you look at age category of 24 or 22 is the first earning check what a Indian citizen starts earning, right? Yeah. Traditionally, they were savers.
Correct.
And now they're investors. I think most of the people don't know the difference between savers and investors. The savers are typically people put money on FDs.
Yeah.
And if you look at now, people do think that putting money in a mutual fund is savers. It is not. Basically, you're investor because you're giving the money to a fund manager to invest.
Yeah.
So that shift has happened between the savers and investors. I think this difference is less spoken about, but it's very critical to understand. Why I'm saying this because as investors you take risk. There is a risk associated with every instrument today. In terms of what category you need to look at is very clear that you need to spread your risk across. In the sense that more and more focus on diversified funds are very important. May reduce some thematic funds, but thematic funds also gives you a part of your allocation on the equity side. Recently, if you look at a lot of people put money on gold. And gold started running, and people said that gold is the right thing to put money. I think gold also forms a part of the asset allocation. Recently, I made a comment that, and obviously you need to look at from a longer term perspective. When you say longer term, there's a bigger debate. And mutual fund, if you look at disclaimer, they said mutual fund is subject to investment risk. in my view, mutual funds are subject to emotional risk.
Okay.
Your longer term is defined by your emotional quotient.
Yeah.
Because either through a peer group or through something, you will decide that I'll redeem today.
Hmm.
Even though you don't require that money.
Correct.
You see the markets are falling.
Yeah.
But I think money is, for example, the wealth is created when the markets are at the lower levels.
Correct.
And there is an uncertainty in the market. Generally, you will be able to get a lower NAV values.
Yes.
So, very important to think about it. So, emotional risk is what plays
A major role.
major role than investment risk.
Yeah.
So, I recently told marketing people that we should change the disclaimer into emotional risk.
Correct. So, no, taking the question ahead, right? If somebody wants to start mutual fund investing now, okay, with your kind of experience, you have spent almost 30 years in the financial services industry. What should be the approach? One, and second is, over this 30 years, you might have come across, various kind of traders, investors, mutual fund investors. So what are the common mistakes somebody who starts investing does, and how to overcome that?
The most of the common mistakes is that people take decisions based on emotions.
Okay.
And that stops from a longer term investing.
Okay.
And across, if you are investors, I'm not talking about savers, I define what is savers are.
Yes.
If you're an investor, the money is not made at the very short term. Money is made on a longer term.
Yeah.
So it's very important to think about how much money required for a day to day and how much you can start saving. It's very important. A lot of people make mistakes there. They override their emotions,
yes.
and they regret later that if I would have invested, I would have made more money. I think that happens. I think there's one larger piece.
Yeah.
Second, you had a trend of people investing in through F&O. Nothing wrong about F&O. I'm not saying that. As long as you're educated, or informed decisions you've taken and well educated in terms of handling this instrument, nothing wrong. Now I'm not saying that F&O mein paisa nahi milta. I always said, I jokingly used to say that future nahi hai, option nahi hai. But as long as it fits to your risk profile, you go ahead and do it. But it can't be part of your larger part of your savings.
Yeah.
I think so. It gives you a understanding that what is important to think about is that what are you saving and why are you saving and how do you want to save. I think these three things, if you are able to understand, you will not make larger mistakes.
Absolutely.
It is not that I have not made mistakes. I have also made mistakes.
Yeah.
I think in India, I think there is not even a single person who have made mistakes on real estate. I have made mistakes in real estate.
Yeah.
Sometimes you would have made mistakes in terms of taking a call on a particular instrument of investing.
Correct.
And you would have realized it later that you did a wrong investment decision. But having said that, what is the right type of return is what people look for. At the portfolio level, if you are able to say that, okay, our India GDP is 6.5%, inflation is 6.5%, and if you say 13% is what a right return, most of the investors, my 30 years of career, I think they will all you ask me is what's the right returns, what should I expect at the portfolio level. As long as you say that I'm covering inflation, I'm part of the India growth story, if that total adds up, I think it's a good number. I see a lot of investors even not able to get there.
Yeah.
Why? It's not because of the emotional reason again.
Correct.
That we all sometimes just get overshadowed by our emotions.
Absolutely. I agree. And also another thing, if somebody is starting investing, okay, it's very, very difficult to go and identify a stock. So the natural, way of investing should be mutual funds. Somebody has to come and start doing SIP in equity schemes, right? Because going and identifying a single stock, and the probability is extreme. That you identify a good stock and that stock performs for next 5 years, because you are not an expert. Right?
I agree with that. I think what I'm thinking about is that, what you said is right. I also was in a brokerage firm for a long period of time where we used to do direct stocks as well as mutual funds.
Yes.
But what the myth people have is that mutual funds is something different than direct stocks. Basically, you are handing over the money to a fund manager. He is buying stocks on your behalf.
Yes.
There are some people don't get thrilled about it.
Exactly.
They want to control. As long as you are taking a very informed decisions and you understand a particular company, and it's hard-earned money what you're putting.
Yeah.
I think it's very important to think about that. That's hard-earned money.
Correct.
As long as you put that into right use and try to work on that, I think direct stock is also not a bad idea.
Yeah.
But given the complexity of the markets today, it's very important that when you start putting money in mutual funds, that's a cycle you should start.
Yeah.
Once you understand how does this your portfolio works,
Yes.
and for example, if you are a full-time, I always said that if you are a full-time into markets, please do what you think is right.
Yeah.
But if you are a saver, if you want to save money and you have a goal planning, and asset allocation is very important, I think you need to make sure that you put money in mutual funds.
Yeah. Absolutely.
And I'm not saying please don't do direct stocks. I'm not, because then I think I'm against my profession, which I started.
Yeah. I think the extension has to be direct equities. When you start understanding a sector, you have know-how how to identify a stock, understand its fundamentals, then probably direct equities.
JP, the question is that how much you have time to allocate.
Yeah, that's true.
वो नहीं होता है ना, most of the time. That's the biggest problem what I see in the people. And most of the people make decisions on direct stocks, not just based on their own research. It's based on what the friends and in dining room chats or lunchroom chats in the office, they decide to buy a particular stock. And buying direct stocks gives you a thrill.
Exactly.
It gives a thrill. I'm not saying that because we all went through in our cycles.
Yes.
Right? And sometimes when you buy stocks, just not making creating wealth, it is just to get self to say that I've got it right.
Absolutely.
We have done that.
Yes.
I think we are not different from our retail investors.
Yeah, true. I agree. So few key learnings here is it's important if you are an investor first to understand your emotions. Okay, have a control on your emotions. Second important thing what Gop mentioned is you need to have a right approach. You need to define your goals and then go for investing. For somebody who's starting new, I think direct equities say better is mutual fund schemes. If you don't have time to analyze the markets and you want to rely on somebody else's skills and judgments. So mutual funds play a great role here because you have more number of people who are doing this day in and day out.
Yeah.
The resources, the access to information is much higher. Okay, they could identify a company really well than somebody who is a novice who is entering market for the first time. So mutual funds become a go-to place if you are really new and want to start investing.
Yeah, I think what your investors also think about is that what happens in a mutual fund.
Yeah.
For example, we, from equity fund perspective, we have 9 fund managers.
Correct.
And we have a structure in place where we have a 4 fund managers along with this 9, they work each other. And they're assisted by 16 analysts, internal analysts. And we have a deep coverage in terms of almost 450 stocks.
Wow.
So that gives understanding. One is that. Second is that we also do a lot of market checks, channel checks. We also have sell-side reports help us to understand where we are. We also have economists in our system to understand where the economy is growing. So all this put together creates a knowledge, and that's an ability for a fund manager to take a right decision. I'm not saying that all decisions of the fund managers go right. But as I said earlier, it is all about informed decisions. And it helps them to take a right decision. So I think there is a large difference between an individual taking a decision and institutionalized led decision making is what a mutual fund gives to an investor. And for that you pay such a small fee.
Yes. Yeah, true. Now, Gop, I like to understand your perspective on the technology side of things. Now things have changed now. Everybody is tech savvy. Okay, the way somebody used to invest in mutual fund, that has also changed. Okay, so how is technology transforming mutual fund industry and the Axis mutual fund per se?
I think one thing is very clear that technology has led this mutual fund distribution across. I think firms like you has reached Bharat. I still remember our days of mutual fund distribution is that we had to set up office. We put so many people, then go behind customers, and we used to come with paper pencil to an investor. Okay. And that's the era which I started off my career as an advisor. I started my career as an advisor, as a wealth advisor. I've gone through the whole chain. When I look back, there is a serious change today. From a KYC to the onboarding a customer, such a seamless one.
Yeah.
And look at from a onboarding, including reporting tool, it is such a seamless and transparent.
Correct.
Early days, we used to take a report and go.
Yeah.
So what has it benefited the industry is that industry was able to grow faster.
Yeah.
And reach out to B30 cities, smaller towns.
Yeah.
And the technology partners like you, I think, have created large investors from Bharat. So for me, digital is Bharat. I think mutual fund has helped us to reach there.
Correct. Great. Yeah. So what's the vision for Axis Mutual Fund for next 5 years?
Oh, we want to be top 6 player. Today, number 8, because we don't do government business. But across fixed income and equity side, we are top 6 player.
Yeah.
Our aspiration longer term is to become a top 5 player in this asset management industry.
Yeah.
We just don't want to look at purely from a mutual fund. We also are very credible, serious player on the alternate side.
Okay.
We also have a large practice on offshore. We advise a lot of offshore customers. Aspiration is to grow faster.
Yeah.
But underlying rule is that we want to deliver consistent return to the investors, and which is risk adjusted.
Oh, great. So how do you see, in next 5 years, the mutual fund as an industry evolving? So today we are close to 70 lakh crores.
Yeah.
And with lot of, enthusiasm and participation coming towards mutual fund and capital markets, what number do you see by 2030?
See, as we speak today, I think we have almost 5 crore plus investors across the industry. And I said we are 1.2 crore investors.
Yeah.
I don't want to repeat, but I want to say that every 4th Indian who invests in mutual fund, one will be Axis.
Yeah.
So when I go out and say I'm work for Axis AMC, with a people are 10, at least I find 2 investors of us.
Mm-hmm.
I think that's a reach the top 10 AMCs have reached there.
Okay.
My view is that we should grow at 25-30%. And more investors coming in today. As I said earlier, they're not savers, they're investors.
Yeah.
So a new set of new gen coming in.
Yes.
I think there is a fair amount of financial discipline compared to our days of our career. I think financial discipline, people want to save money. That's because the financial education is very strong. I think people want to save money and they want to retire earlier.
Yeah.
I think if you ask a 24-year-old guy, after working 2 years, he said, I want to retire by 35. I think that is the scene. If that is an aspiration, I think they start saying, but I don't know whether they will retire at 35, which I also made a comment in my days that I'll retire by 40. I'm already 54, still not retiring. The idea is that the financial planning and asset allocation is getting much more focused.
Yeah.
I think that's where I think that wealth creation is happening across. So the industry will grow at 25-30%, and a new set of investors will come. And more importantly is that what I want to, the way I think about is that there's a huge amount of digitalization happening. And that is bringing a lot of formal economy back to the formalized economy, because I don't take cash, right?
Exactly.
You're not a cash. And so in that sense, the formalization of economy is helping the asset management industry.
True, absolutely. Yeah, so Gopal, I'd also like to touch upon, the recent crisis which Axis Mutual Fund faced. As a leader, there would have been certain tough decisions which you had to take. So you'd like to throw some light there,
Yeah, it was a very unfortunate decision. I think it was because of one rogue employee. Having said that, we went through the whole issue.
Yeah.
And we have now reached a settlement with the regulator. I think that issue is now completely done and forgotten about it. Since we have put a process in place, we had a couple of audits from regulator. We didn't have any regulatory breach. As a team, as an organization, we worked very hard to be there where we are today. Now, we've been growing AMC. Last year, we grew by 17%. I think we've been growing much faster. I think that's left behind. We built a new set of management team, which are very broad-based. It's just not because of that incident, but more important that we want to grow.
Correct.
I think that is done. So we got a new set of people. We have got strengthened our investment team. We strengthened our branches. Now every year we have decided to put 40 more branches. We have crossed now 101. This year also we'll put 40 branches. Our focus is twofold. One is that how do I reach a distribution community? So we have branches to service them. We also reach out to customer through digital.
Yeah.
Our own app, we are 4.7 rated.
Okay.
Done extremely well on our digital assets. So I think industry will grow.
Yeah.
And we also come from a large bank.
Yeah.
And we have a large trust with the investors.
Yes.
And quite happy to take this journey forward. I think I spent now 2.5 years. I think it was a great time for us to fix it. I think we are in a very nice, stable position now, and we are growing.
Okay. Oh, that's wonderful. I believe that under your leadership, there will be remarkable things happening for Axis Mutual Fund. Yeah.
It's all about the teamwork. I think I have a very strong management team.
Yes.
Very strong team. We started, when I came in, we were around 600 people. We are 1,300 people.
Wow.
Second is that we are very customer-centric organization. I think it's just not a word which every CEO uses.
Yeah.
We measure the NPS scores across.
Okay.
And we are building it much more deeper in terms of our gathering feedback from our distributors and investors. I think we want to be very distinctive AMC, and because it's a very generic product, right?
Sure.
AMC is,
yes. Yeah.
but it's very competitive, and it is always based on performance.
Yeah.
And we need to be very consistent. That's our delivery and promise to the investors.
Great. So, just talking in terms of investment philosophy, what is that which differentiates Axis Mutual Fund from others? Is it your approach towards certain style of investing, or is it like as a house, you have what kind of exposure you have on small cap, large cap, thematic? If you can throw some light there.
See, as a philosophy, I said very clearly we are a growth and quality driven. We have not changed our philosophy.
Okay.
But what we changed our philosophy for the last 2.5 years was to remain more diversified.
Okay.
So that we're able to work on a framework on risk-adjusted returns. So I would have repeated some 10 times, but it is very critical for us to build because it ultimately is a customer's money. It's very important that we need to be very conscious about it.
Okay.
It is just not chasing returns at any cost. We are very clear about that, what we're trying to do. I think that is one distinctive feature about Axis AMC.
Yeah.
Second is that we build products across customer segments.
Okay.
So if you ask from my retail customer who can, we just launched 10 rupees SIP.
10 rupees SIP. Okay.
Yeah, we have a 10 rupees SIP. We have a daily SIP.
Okay.
So from there, we have alternate products where institution also comes and participates for us. So we have a large breadth of products.
Okay.
Second is that also we build products based on themes which we do believe are longer term themes. For example, we did manufacturing fund, which is a top performing category because we believe that it is a very structural change. Second, we did a consumption fund.
Okay.
We do believe that consumption is another area which we need to focus and build portfolios for customers.
Yeah.
What we are not going to do is very important to say that is that we will not do a narrow themes.
Okay.
Very, very narrow themes like defense, automotive.
Okay.
That if I have to do it, I will do it on the passive side.
Okay.
So I always said that, what we do, everybody will know.
Yeah.
What we don't do, we don't communicate.
True.
I think what we don't do from a very clearly perspective is that we will not do narrow themes.
Yeah, and what you don't do differentiates you from others.
Yes, thank you for saying that. I mean, we try to attempt to communicate in most of the forums, but that's how it happens. So
yeah, I think it's wonderful. So thank you so much, Go,
thank you, JP, for coming
your
to
time.
office.
No, it's always been my pleasure.
Yeah.
We hope to interact more and understand and
very happy to support you. Thank you so much.
Thank you so
for
much.
all investors. Thank you so much.
Thank you, everyone. Thanks.
Thank you.
Yeah, thank you.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.